this next 20 minutes, we're going to talk about how those smaller emerging markets can prosper. And I'm very lucky to say I have a gentleman who's definitely got some answers sitting next to me, Simon Cooper. Simon is the CEO, Corporate Commercial Institution Banking, as well as the CEO for Europe and Americas for Standard Chartered Bank. So you're a busy gentleman. You've got it. I mean, like, that is a big old title.
Not too busy to see you.
Oh, no. Well, we appreciate taking the time out of your schedule to come and speak to us here in the Sanctuary. And I had the pleasure of talking to Simon 2 years ago on this very stage. Time flies, doesn't it? I mean, where's it gone? And then you had released a really interesting report, a piece of research about the need for a just transition to emerging markets if they're going to reach net zero in a way that's equitable with the rest of the world. So I just wonder if we could push back a bit and what kind of change or developments have you seen in the 2 years since we last spoke on that very subject?
So I think there's been a lot of talk about globalization's over, absolute nonsense. Actually, I think what we have seen from our clients is a reaffirmation that globalization is here and is here to stay, and global trade within that is going to grow. We're forecasting now just over $31 trillion of trade by 2030 from 20 and a bit today. So we're seeing continued growth in trade, which, as you say, is a fundamental means of transferring capital to where capital is needed to crowd in more people to the economy. And we're seeing that growth coming particularly from Asia, Africa, and the Middle East, where obviously there are large populations that need to be brought into the economy and brought up the wealth scale.
The WTO have just released their outlook for next year. They actually had to slash their forecast for this year's gone. This year wasn't the best of years, but they are optimistic about next year. And actually the music in Davos is one of optimism. I was talking to a gentleman yesterday about CEOs and where they're placed. Would you agree with that it may be more optimistic than it was this time last year?
So it's definitely more optimistic than it was this time last year. I mean, the general trend is whatever the mood in Davos is, you bet against it. so I think, the good news is I think it is more optimistic than last year, but I would say the mood is actually more realistic. So I think there's optimism with some caution that things need to be worked on. We're seeing clients think about how they plan for the future, perhaps more seriously than they have in the past. But the mood is a good mood. It's a balanced.
And you're right to bring that up. So before we get carried away, there are still some real barriers, aren't there, to trade and barriers to growth. I mean, we'll go through a few of those now. Geopolitics being a big one. Tariffs are still very real, aren't they? We've still got inflationary risks. We saw what happened with UK economic data out today. So, I mean, you spend a lot of your time talking to clients on airplanes around the world. What are you hearing about those barriers? Where do you see them?
So you've got geopolitics, definitely. You mentioned tariffs. You've also got interest rates. Financing is expensive, and that becomes a real concern for clients. So I think what we're really seeing is clients saying, we need to start thinking about resilience. We need to think, how can we be more resilient against these potential shocks? So when you talk about multinationals, they're becoming actually more and more multi. They're being instead of bilateral trade, you're now seeing real multilateral trade. You've seen that in terms of Vietnam or Indonesia, growth in Southeast Asia, where companies are investing for production, but they're also, ensuring their supply chains are more resilient.
And that doesn't happen overnight. I mean, it's a big project, isn't it? So where are they on that kind of project, would you say? They're building in resilience.
I think the project started some time ago. I think COVID was actually a catalyst to accelerate that resilience, and I think the journey will continue. So I think you will see. And people talk about China plus one or market plus. Actually, I think you're seeing China plus many as the sort of buzzword around most boardrooms today.
And with geopolitics and issues which are out of the hands of a CEO, how do your clients deal with that? Is it they just have to work around it?
So I think again you come back to the point about how do you trade is happening, economies are growing, people we're sitting on a chair. We've got cameras that are all part of a global supply chain. Various parts of and components have come from all around the world. That's continuing, and that continues despite geopolitics. The idea of the resilience of having multiple manufacturing centers, multiple markets, gives some protection against anything geopolitical. And you start off talking about optimism. There is a lot of geopolitics. There's a lot of noise, but commerce is continuing. Business is growing. There's a lot of cause to be optimistic, I think.
Now, Standard Chartered has a huge footprint in the emerging markets. It's kind of one of your core businesses. And I know that you've been advocating for this reset for a more sustainable and inclusive form of globalization for a long time. So what progress or lack of are we seeing when it comes to equitable trade in those emerging markets? And maybe you could highlight a few for us.
So I think we are starting to see some progress. And trade, I think, is what do you need to reset globalization? You need essentially to move wealth and capital towards those markets that need it more. Trade is an ideal means of doing that. The other is of course, investment in sustainability and social issues. I think within trade, what are the things that matter? Cost, visibility, transparency of the entire supply chain, and the ability to move cross-border. The big discussions around technology here today, I think are super exciting in terms of what they can mean for trade going forwards and commerce going forwards. So we've done a lot of work with partners in terms of how can we look at deep tier supply chain. So how can we bring clients 10, 12, 14 layers down in the supply chain, and how can we create a financing system that brings them in? That's huge in terms of bringing people into the economy, in terms of resetting globalization. And I think you're just going to see more and more of that. And that's the barrier for smaller SMEs to come in. It needs to be cost effective, and we need to be able to essentially understand the credit risk. So to have supply chain financing going that deep, I think is going to be a real catalyst for and we're on that journey.
Yeah, and I know you've been talking a lot about AI. I think, was that this morning? You just came from an AI conversation on that. I mean, so I know in the past you talked about technology being the key to unlocking this and allowing more growth in emerging markets and local suppliers to come in, and also more visibility down the supply chain, which helps, of course, with sustainability and the road to net zero. So just tell me about the financial toolkit that's potentially around supply chains, which you're advocating.
So I mean, you may be surprised. The majority of trade finance today is paper-based. Documentary credits, etc., are all based around paper.
Which is surprising.
Which is amazing. I think the advent of technology such as blockchain, such as AI, to really get operating leverage into those supply chains will have a benefit in terms of bringing down cost. Back to those points I was talking about. If you can bring down costs, if you can also increase transparency by using blockchain to identify nodes on that supply chain, if you can use it to identify sustainability within the supply chain, then you get a real leverage impact in terms of the ability to make supply chains really make a difference. And that's what we're seeing.
And I know that you've got some research out that says, by 2030, this technology could increase exports in 13 key markets by 7.5%. I mean, that translates into a lot of money, doesn't it?
It's a huge amount of money.
Yeah.
And as I say, I think you're seeing a lot of investment, a lot of technology sort of leading towards that, a lot of that sort of rebalancing of supply chain. I think what we need to see happen now is more uniformity. We need to see more interoperability of different systems, different technologies to allow that to really motivate. But I'm sitting here today pretty optimistic. I'm not a banker. Bankers are never optimistic.
What needs to happen? I mean, where are you in terms of adoption? Is it in infancy still, or are you seeing it being rolled out, the technology?
I mean, adoption is something like 18%, so it's nothing like where you would expect it to be, or you expect it could be. And I think that, why is it lower than we would wish? I think it is because of differences in regulation around data transfer, differences in technology acceptability. We're starting to see progress. We saw progress around carbon regulation in March last year, where we're starting to get uniformity around taxonomy, uniformity around definition. But we need to see more of that. We need to see the world coalesce a little bit more.
And when you talk about regulation, is it between countries? Is it regional? What can you tell us a little bit more about that?
I think it's a little bit of both. So you're seeing, I think, good progress. Central bank digital currencies is a good step in terms of starting to make cash flow more quickly, more seamlessly. We've done a lot of work with, say, living in Singapore, the MAS. looking at how you can tokenize trade assets, which means you can bring the cost of trade down. You can actually bring more people into the investment arena around that. But that's one market. We've done work around digitizing the supply chain. The key is to make more markets connect. So a lot of really exciting programs going on in lots of different countries. As with all development, they need to coalesce, and we need to see them become more interoperable. And that just means more and more comfort, and more. We need to help educate people how that can work.
And your role? I mean, Standard Chartered is a catalyst amongst all of this. But what do you see your role is?
I think the role is as a catalyst, because you're sitting in. We're very privileged to be operating in almost 60 markets where the growth is really taking place. We have the ability to be a connector, to connect clients across those markets, and to be a trusted partner. Trust, I think, is super important in trade and in supply chain. We have the opportunity, I think, to work with technologists, to work with clients, and to work with regulators. And that word catalyst, I think, is exactly what we'd like to be.
One quick comment on capital flows. Again, it's slightly change of pace. But again, we talked 2 years ago about this huge north-south divide, and the global north, trillions of dollars under asset management, and the need to move that more into the global south and at scale. What's happening on that front, and is it happening as fast as you'd like?
So I think you need something like $4 trillion a year to meet the Sustainable Development Goals. It is happening. It could certainly happen more quickly. We're starting to see, I think, blended finance as a real trigger for that. I mean, I'll give you an example. We were working in Ghana looking at a really poor region of Ghana, looking at their water supply. And we looked at technology coming from Sweden, bringing in export credits to support that. $50 million, not a huge amount of money, but that $50 million project will probably provide clean water for 300,000 or 400,000 people. So we're starting to, again, see that. We've done probably $10 billion of transactions around blended finance in the last 4 years. And I see that continuing to grow.
Okay, that's good. So in terms of your outlook for 2024, in terms of Davos 2024, who are you talking to? What are your hopes for this year? Because I know you come here with a mission, and you come here to talk to people. What would you like to return to Singapore having achieved?
I mean, Davos is always fantastic in terms of connecting. And as I say, I view ourselves as a connector bank. I think if the connections that are made in this week can really open people's eyes to the opportunity that exists. There's not a shortage of investment. There's not a shortage of technology to support supply chain and to support economic growth. There's probably a shortage of connecting that together. So if we can come together as Davos and beyond and actually leverage those connections, then I think we're in a pretty good place. And
the markets that you serve, the emerging markets, do they get a big enough voice at Davos, would you say? Are they represented as well as you'd like?
I think they're getting an increasing voice, actually. I think as you look at the sort of democratization of the Davos dialogue, I think you are seeing emerging markets have more voice, and people are, I think, really interested because as part of a supply chain, that they have a lot to add. I would say that I don't think sustainability has been as loud on the Davos stage as it has been in the past. That's a shame. But I think we can still keep reinforcing that. And what we've been talking about today has a real benefit in terms of that as well.
Another reason for you to come back and talk to us next year, because we'll definitely talk about sustainability in more details then. Simon, it's a real pleasure. A big round of applause, please, for Simon Cooper. Thank you so much.